Welcome back to Wallstreet and Web3, hosted by HHTrader over there and me, Framework Fortune. Ooh, it's been another crazy week in the markets. A lot of updates. Where do we even start? I mean, I guess the first place to start is we had the quick sell-off in the markets, but crypto's still down, but been rebounding, and the entire NASDAQ and everything is not really that far down, 1% below all-time highs. Bitcoin rebounding back up to around 93,000.
We've been seeing oil and gas and all these energy talks, especially coming towards these rate cuts that could be coming at the end of the year. One of the things that I'm focused on is what people with money and without money are doing. So one of the influxes that we saw was at these dollar stores, Dollar General, Dollar Trees, all of that. We're seeing more influxes of people with money going and saying, hey, you know what? We can't find a bargain that we really agree with at these other places. So we're going to just go to a dollar store and be the kings of the castle. So I'm wondering how those influxes on those dollar stores, is it going to make them ramp up their prices because of demand? And also with the supply chain, the things that they have in the store, how much of that is getting hit by tariffs? So if it disappears, how easily is it to resupply or restock up those shelves?
Why do you think it is that rich people are hitting up Dollar Generals now?
Well, I think it's one, because they are the bargains. I think it's the bargains.
Everything's made in China, so it doesn't matter if you go to Walmart or Dollar General or Target.
I think it's just a bargain thing, because the more you know how money works, and the more you're constantly shopping for discounts, eventually, especially with AI, Gemini, all these things being able to throw you data, you can type that in AI, hey, yo, where can I get this? And it's like, oh, well, here. And you're like, yeah, that sounds good. But are there any? They're like, oh, yeah, Dollar General has this off brand over here that does the same thing. Boom. So
if you're not using AI for your Christmas shopping this year, you're really slipping up. Use AI. It makes it so much easier. Just whatever you're looking for, you just ask it. Say, hey, I'm trying to get this for my kid, and it's gonna give you a link to the cheapest place. Just say that in AI. Say, hey, I want the cheapest place to get this from. So that does make sense. I had not thought about that, but yeah, use AI for your Christmas shopping. I used it to buy a computer, and it was a great decision.
Oh yeah. Next thing, thinking about what's going on with people is what's happening to people that are supposed to be ending their journey of working and all of this, right? In the past, retirement really wasn't a thing until we got into this truly capitalistic society where people had the investments, they had the money coming in, and people were like, man, I'm just going to retire, right? Retire on my investments, let things pay off, whatever. But now we're seeing a elongation of student loan payments. We're seeing people 60 years old, they got what, 20K left on their student loans. They're like, yeah, I need to keep working.
They're working at Dollar General.
Or they run into a situation where they get grandkids. They want to have some money to give the grandkids. Used to be the old folks would always have cash for candies, and you go to them and you're like, hey, you got $1? And it's like magic. They're like, yeah, I got $1. Here you go. Get your little Snicker or whatever.
They're pulling quarters out from your ear magically.
Exactly.
Now with inflation and tariffs, yeah.
Exactly.
Because candy back then used to only cost them like 10 cents or 5 cents. I've heard the story. Now, man, a candy bar is $4. Crazy.
So when it's kind of like a pride thing. Of course, we have the American dream and the pride, but you don't want your grandkids to come up and be like, yo, can I get a candy bar? And you're like, I'm gonna have to put that on layaway.
Yeah, the candy bar on layaway is crazy. I'm using Zip Pay to pay for this candy bar in 4 payments over the next 4 months.
Yep. And so what we're seeing is that going into people getting to retirement age, and they are getting their Social Security benefits, but they're also continuing to work. The only thing is, it can be a bad thing if you start getting your Social Security benefits too early, but you're still making making a amount that's too high to make you a retiree. You get less in those security benefits, especially when you start pulling earlier. Let's say you're at 62 instead of pulling at 70, you get less. So it's an impact there. But if the people need the money now and they start drawing early and they need the money now, everybody's going to be losing out on that benefit of getting that later pool. And that's why I think you emphasize so much getting invested. So when you get to that point, you have some feet to stand on. Because if you're 60 years old, you have zero investments, you've touched none of that. Maybe you do have a 401k, whatever. But a lot of people now are having to pull out of their 401ks before they even get to retirement. So are you willing to pay those the what they call them when you withdraw the penalties? Are you willing to pay that back to your 401k? Or are you going to be sitting in a deficit when you get to your retirement?
Yeah, man, it's all a trap. It's all a trap.
Yeah.
401ks. I mean, you just think about what we're saying right now. To pull money out, your own money, you are penalized if you pull it out too early. How is a piece of paper that says a certain age for everybody, how is that the right call when everybody is at a different point in their lives at all times? You know what I'm saying?
Yeah.
It don't make sense. 401ks, all that, it's a nasty trap. But if you do got it, I think one thing with Dollar General you're talking about, if their sales are going up, they're getting a lot more rich people in there buying things. Dollar General's also been on our stock watch list for a long time. You've mentioned it before, how they are every 5 miles. They're literally, if apocalypse happens, Dollar General is set up to take care of everybody.
Yeah. Even looking at Dollar General being something that a lot of people see as the lower income kind of way to go. When you look at like things like Kroger has an inverse beta score. And when we look at stocks and things, beta tells you how it reacts to what the market is doing. In bad times, when the market is coming down, Kroger and those grocery stores typically do better. But when you look at how Dollar General really ramps up during those bad times, it's insane. And if you're investing in Dollar General, it's like it's almost like investing in like Wendy's or something like that, because those stores never go away. Like things go bad, Wendy's like, you need a Frosty? What you need, my boy?
Wendy's always got them Frosties. Wendy's, I want my sponsorship. We're getting this Frosty sponsorship. I promise you. Glad you mentioned that. I haven't mentioned that in a long time. Yeah, but you're right. I mean, they are there. Yeah. The biggest selling asset of 2020 during the shutdown, the most apocalyptic time we've ever had, it was toilet paper. And Dollar General kept the toilet paper on deck as more than Walmart or anybody else.
Yep.
It may not be the best toilet paper. You may be getting some sandpaper disguised, a little white food coloring on it, but hey, they got it. But yeah.
Hold the line.
Hold the line. Yeah, man. Man, I don't know. That's scary. With the Social Security thing, the thing that bothers me though is like, we're 30 something, almost 40 trillion in debt now. It's been a thing for a while that Social Security is going to run out. However, it seems to still not be running out, I guess because they can keep printing money. But at this point, say if you're like our age or younger, in the early 20s or something like that, maybe even in high school, by the time you're 60, you've got to be banking on the U.S. government having money in that Social Security.
Mm-hmm.
So if we're at 40 trillion now and you're 20 years old, in 45 more years, are we at 120 million or 200? Like 200 trillion, not 120 million, 120 trillion, 200 trillion. Or we got some crazy number and Social Security doesn't exist anymore, or they cut it.
So I'm wondering some of the recent statistics that I've been kind of looking over for young people, how they are doing more discount and bargain shopping. They're taking into consideration, because we're not the boomers. We're not people that went through the world wars and had all these pensions and all this crazy, money available, companies offering these crazy packages. Now, companies do still offer crazy packages, but you really gotta probably know someone to get in those positions. But younger people are doing the math, and so a lot of what I'm seeing a lot of times when I was coming up, people hated math. They ran from math. They ran from the numbers. They ran from the statistics. But these younger people are asking why. And even in my trading, when I talk to on the live stream or whatever, I talk to the different traders. I'm like, there's an order to trading. If you have no why, how do you find a win and where to enter? If you have no why, like if you go to this was an example that I gave. If you go to a car dealership and they're selling cars, and you go out to a car lot, and I was referring to people that don't use Catalyst or use news or anything like that. You go to the car lot and you say, yo, I need me a car. And the person says, oh yeah, we got cars. But they don't ask you what you're looking for. They just say, we got cars. And so you're like, well, just tell me what everybody likes. And this is the volume. Everybody's just, you're seeing the volume, you're seeing the chatter, and they're like, yeah, we got this car that's just disappearing. But are there any reviews on the car? Nah, we can't tell you any reviews. So what's the durability of the car? Can't tell you that either. All of this information is missing. Would you still purchase, sign on the dotted line without all that underlining information? Most people wouldn't, especially these younger people that are asking why first before they jump into the fire, before they jump into the frying pan.
Yeah, asking why you're gonna buy is a great thing to think about. If you don't know why you're buying something, that is absolute insanity.
Yeah,
it's absolute insanity.
We call that gambling.
Yeah. Well, even if you're gambling, you still should know why you're buying it. Or you're playing blackjack to have fun and gamble, so you still know why you're doing it. Like, that's what I'm saying. Like, if you don't know why you're buying something, that's really crazy. That's like you're like, I'm gonna wake up today and I'm just gonna go and I'm just gonna buy me a 20-pack of what's some square batteries?
Those D batteries?
Not the D's, the square ones. You know what I'm talking about. It doesn't matter. You go in and buying a Roomba for no reason. Say you got a maid that does all your cleaning. You're like, I'm just gonna go buy a Roomba.
Well,
why would you do that? That makes no sense if you got a maid.
And it's even worse than that. When sometimes when I talk to these folks that say they're just purely technical traders, they trade price action and that's it. If you're just trading price action and that's it, you don't know all you know is there's I forgot. I used to watch this guy. I think his name was Patrick Whelan or something like that. He used to say there's just a boner candle. There's just something sticking up and people are going for it.
Yeah,
and it's like, why do you just want to be in something and not know when this thing can drop or what levels it can drop on? You're in there now. Maybe this is the whole diamond hands. And I think that more and more young people are getting away from diamond handing because at the price that things are now, a mistake, especially when you have people to take care of, you got people depending on you, a mistake now, you can be sweating bullets. You're going to be, especially if you're holding overnight. Now, we do have a stock that if was held overnight went very crazy, which was SMX. And so it was one that we mentioned in a previous video, but seeing that thing go from $4 to it's like, oh, this thing's a little hot, up to $70. It takes a while. It takes a little breather. The shorts are like, okay, woo, we got some of our accounts blown. And then the next days from 76 up to I think it was 460 or something like that. Bro.
GameStop type of move, but this is not a But this is not a game.
Hit the subscribe button and turn notifications on so you're ready for a new episode every Sunday.
GameStop type of move, but this
Man,
is
what?
not a. But this is not a GameStop type of play. This is actually a legitimate play from the news and everything, which is why, it went to $400. Is that where the high was?
Yeah, I think it was higher than 400. I think it was like 420, or it might have been even higher than that. Let me see.
Yeah, that's a fantastic rip. The
Yes,
shorts.
it went to 493. 493.
The short souls just left their bodies. Once that thing broke $100, the shorts, they were done.
And this is one of the things that they don't count on. And this is one of the things with knowing the market cycles. This is where it comes into kind of fruition. The end of the year, people are trying to do tax loss harvesting. We have the Christmas run where it goes through a little dip and then goes up. A lot of people, instead of investing in these single name players, they invest in small cap ETFs or small cap, some kind of portfolio of small caps. And this is why. Because if one of them goes crazy, man, I mean, you have less exposure. But if you buy the single name, if you bought SMX at $7, you are sitting up pretty right now, even with one share.
Yeah,
because I saw one dude in my stream. He bought 2 shares. I was like, bro, but he bought them at probably like 200 or something. But still, that's a $200 move on 2 shares.
Yeah, you don't need much, and it's not unheard of. We see these moves all the time. It's just not. Like you said, the market cycle is real important. We just had that crash, but at the same time we had the crash, we had interest rates being cut, and then rumor of interest rates being cut again this month. There's been the talk of the stimulus check, but there's nothing confirmed on the stimulus check yet. There was a tweet from Trump that did say the tax refund season is going to be one of the biggest tax refund seasons ever. Like, they're really going to be giving some money back from the tariffs and whatnot. Supposedly, we'll see if it happens or not. But if that happens, we're set up for a crazy bull run. Interest rates being lowered, and then coming into a big tax refund season for everybody. And we're already starting with a runner like SMX. We've seen bull markets start off with some penny stocks and altcoins ripping.
Yeah,
on like big rips like this. This is usually how a bull starts.
I always look at the markets, especially gold, silver, and all of those. When people pile into those because of fear, when that money spreads back out of gold or spreads back out of silver, we see these big small cap moves. These things where it's like, oh man, we put all this money over here in the gold because we were scared, and now the situation's looking a little bit better. So what happens if we pull some of this, because gold was at like all-time highs, and now it's starting to dip back down because people are getting a little bit, they're feeling better as we're coming into this whole rate cut thing. And so these small cap moves, I'm expecting to see more of them as more people pull back out of gold. But again, coming into January and the whole healthcare shakeup, I'm thinking it's going to be people pushing back into gold bonds and some of the safer stuff. So I don't expect this to last forever. We said, market cycle.
Yeah, that could be a problem. Healthcare could be an issue because everybody's premiums are going up no matter what you're on, and health insurance is already not cheap. So we'll see. That's the thing. I think this is the type of overall market conditions we're going to be facing for a while because of inflation. Even though they're saying inflation CPI is at 2.9%, that we all know that's a joke. It's higher than 2.9%. Come on. Y'all are talking crazy. There's no way y'all got it down that low. And we got the tariffs. We got a lot of political uncertainty, a lot of global uncertainty, AI tearing up the industries and advancing the industries. We are going to be in short-term bull and bear markets. So that's what we're talking about right now, where the next month or two is going to be pretty bullish. But then we could see, and historically we see after tax tax returns after February, it really starts to die down again till summer. So that's when you're going to let them fly, you want to let them fly during the bull.
Yeah. And you know what? Since we've had more traders coming into the market, summertimes have been way hotter than they used to be. Summertime used to be a dead area where people were vacationing and things like that. But now that you have more people shutting in, saving money and all of that, they shut in to their computers. They shut in to these applications, and they like summertime is some of the hottest time ever now. When it used to be people on vacation, people with money were going on vacations and stuff, but now it's just like we gonna do a little movie night. We're
going to Dollar General. We're buying up all the popcorn, all the soda. We're buying all the DVDs off of the $2.99 shelf.
Yep.
And we're gonna go in. We're gonna day trade and watch popcorn and movies. Yeah, man. Yeah, I don't think we're gonna have like long-term bull and bear markets anymore. I think it's just everything's too what's the word I'm looking for? Too chaotic. So, but we did have a big partnership this week, or not a partnership, but a buyout. Netflix continuing to try to compete with the internet cable of YouTube and all the different shows on there. Netflix has bought Warner Bros. Discovery in an $83 billion deal. Crazy. And Warner Bros. Is a stock as well as Netflix, so there's going to be some. I mean, I would say keep an eye on Netflix.
Yeah. Netflix ripped. Netflix ripped, but Warner Brothers started ripping before. It was up like 10% when people found out. Now, I don't know what's going to be the transition rate. Like, if Netflix is buying out Warner Brothers, are they going to change the name, or is it going to be a subsidiary, or how will they work with the share transition? So let's say if you had 1,000 shares of Warner Brother, how does that transition? Do you get any Netflix, or I don't know what the exact deal. I didn't see the details on that. Maybe that'll come out soon, but
yeah, we need to see the details of that deal, because that's the most important thing.
Yeah, and Netflix, of course, they've got so many things going, but they're fighting a real uphill battle because YouTube continues to outshine. Then we have all of these other new things coming out behind YouTube. We got Kick, we got Rumble. Rumble's been out, but Rumble's picking up more steam, especially with this part. It's kind of linkage to Locals. I don't know if you heard of Locals, but it's like a community building whatever membership where you can actually it's more, I wouldn't use the word kind of decentralized. It's less strict. You can it's less micromanaging by an overseer. So even though YouTube is really at the top of the game because it's connected to Google, and it's connected in Google. I mean, they have pretty much infinite pockets. They got Gemini. They got everybody's falling back. Even when ChatGPT and OpenAI came and took control, it all still fell back to Google. All Google said is, "Oh, you got you some little AI over there, huh? You got this boy Gemini rolling out," and then they rolled out with Gemini 1, 2, 3, and all this. And ChatGPT is like, "Oh my gosh, when did they even start this?" But these people with deep pockets, it's not like they're so out of the loop that they're going to let some little player come in and just be like, "Oh yeah, we're going to be the next Google." No, you're not. Google's connected to everything. They have everybody's data. They can sell it. There's, like I was telling them on the stream, there's so many ways to sell your data. These companies sell your data, but you can legally allow them to sell your data and make money off of your data, whether it's your internet usage off of your router, whether it's on your computer, device by device. You can make money, and it's a completely capitalist society. You can make money with anything that powers on, really.
Yep, that's facts. And there's a lot of ways to do it with crypto as well. I mean, there's just so much ways to make money now. It's you have a computer and the internet, you really don't got much of an excuse.
Yeah. And speaking of computer and internet, our boys over there in Australia they are definitely putting some limitations on their social media when it comes to Instagram, Facebook, and all of this. Their age parameters. So they're trying to restrict like 16-year-olds, anybody under 16. They're gonna be restricting their social media usage. They're seeing so many downsides to social media as far as in the developing minds of young people. You have access, older people, older men and women, they compare themselves to other people on social media. But for kids comparing themselves, sometimes they haven't developed the skill set. They see these kids online and these other kids somewhere else have crazy skills, right? But it's not because they're so smart or they're so on the next level. It's because who they have access to. And a lot of times you look at their social groups, their parents, their networks, that's where that true knowledge comes from. So a lot of times they try to be like, oh man, I want to be like this person. No, you need to do some deeper dive and see who they're connected to boost them to their level. Because most people aren't just jumping out on the internet and they're like a crazy, creator and all. No, everybody is not Mr. Beast. Okay. And even Mr. Beast had connections. So so it's like, I'm thinking over the next couple of years, I'm wondering, is it going to spread from Australia, the little deadly little continent of Australia, over to other places? Like, I know for a fact in the US, when it comes to attention spans, when it comes to remembering things, you give a kid a number, he's gonna stick it in the phone, or she's gonna stick it in the phone. And if you ask them in a week, hey, what's that number? What are they gonna do? Flip out their phone, pull up that number. The memory and the pattern recognition, remembering patterns in day trading, in the stock market, it is all patterns. It's all remembering what happened in the past. And if you don't remember what happened in the past, well, you're probably going to repeat it, and that's going to be your future. So if you have these short attention spans, these short, don't know how to manage their emotions, don't know how to do all this, and then have a short attention span, that's a ticking time bomb. So I think Australia is already putting their foot down and saying, you know what? We're gonna change some things. We're gonna make sure y'all can remember some phone numbers.
Man, it's something that the parents should do first. It shouldn't come down to the government to tell your kids not to be on social media like that. It's kind of sad that the government has to do that. I hope to God that America never gets that strict in the government. But at the rate we're going, right now, you're right. Especially short form content, it's not great. For people's brains to who are developing to take a lot of that in. It is problematic. But damn it, parents, do your job. Don't make the government do your job. This is why we're in the situation we're in now. Government is not good at doing jobs. If they were, we would not be $40 trillion in debt. They're terrible at their job. Clearly. There's nobody else in the world right now who is $40 trillion in debt. The U.S. government is terrible at its job.
We're IOU Super Saiyans.
Yeah. For real, that's a perfect title for it. IOU Super Saiyan. We've mastered that. We're Ultra Instinct IOUs. That's what we are. Our government throw IOU out there like it's nothing.
Yeah.
We just bought the moon with an IOU. Yeah. Here, God, here's an IOU for the moon. Yeah, man. But we're seeing, I mean, I don't know what's going to happen with all that censoring stuff. That's Australia, like I said, they're right or whatever, but like we're in crazy times with social media. We're seeing market moves from when Trump tweets something about a stock, or a celebrity mentions a stock or a crypto. We can see moves in the market just off of that type of stuff.
Mm-hmm.
So there is a lot of power to social media, like a whole lot of power to social media.
Mm-hmm.
And I think that's gonna be I think it's going to continue because, like you said, adults are not getting restricted in Australia, but we do have in America where some states have banned porn. So that's gonna, when you have censorship and bans like that on big industries, that's going to shake up prices.
Yeah.
Like if Facebook loses, millions of Australian kids from Facebook or whatever,
Yeah.
that's going to affect the stock price probably, especially like you said, if other countries continue to
I mean, but
adopt
is it
that.
going to be a negative effect or is it going to be a positive effect? Because if adults, parents, and things like that, they're able to see that, hey, this company, Facebook or whatever, actually is taking steps to reduce the effects of social media on my kids. Will it be a positive, like, hey, you know what, let's use Facebook more because it's providing this, especially for like little kid, like, like not toddlers, but like the ones that are like 6 or 7, those really young kids that maybe just need the educational content or something like that. Because I don't know how granular the restrictions is going to be. Is it going to be all social media, or is it going to be like we can still provide educational value to the kids and then allow, block everything else? So their actual feed, the algorithm feeds them those only that safe stuff.
Yeah, that's really scary because it's the government who's saying what the safe stuff is. They want to do some little brainwashing, some Agent Orange, some MK Ultra stuff in there. They can definitely do it. They could definitely sneak it in your kids' education stuff.
Yeah,
man. I don't know. Just do your job, parents. Don't let the government do it. That's all I can say about it.
Yeah.
But we do have a big shakeup in the crypto world. Vanguard has allowed trading of crypto ETFs on their platform: Bitcoin, Ethereum, XRP, Solana. So while we just had this crash, things are starting to heat up again. All of a sudden, Vanguard's like, we love crypto. I've been saying forever, Vanguard loves crypto. They're just not publicly saying it. Now the ETFs from Vanguard are here. And we were talking about last week how a couple of smaller companies were pulling out of the ETFs, and they didn't want to compete against Vanguard and BlackRock. So now you have the two biggest investment companies back to retirements and portfolios. You're going to have Bitcoin, Ethereum, XRP, and Solana ETFs probably in your 401ks because Vanguard and BlackRock are the ones who do most of the portfolio handling for 401ks. So that's coming. So even if you're against crypto, if you got a 401k, it's a good chance you're going to have crypto in there.
Yeah. And I say it's better to have it than not. It's better to have it and not need it than need it and not have it.
Well, I mean, it's just, at this point, it's not like crypto's going anywhere.
Yeah.
It's too much money in it.
Yeah.
They've made a whole market out of it.
You mean you to tell me I'll never get to buy Bitcoin again at 10 cents? Dang it.
You might. Bitcoin maybe. I'm in the camp of where I don't know really why Bitcoin's worth what it's worth at this point.
Yeah.
Because it's like there's just other blockchains that do things better. Like Solana's way better than Bitcoin. There's way more businesses on Solana because gas fees are cheap. It's easy to do things. So I don't know. That Bitcoin, other than the argument that it's like an asset like gold or oil, and the ETFs now back that. Yeah. There's ETFs backing it. So, but other than that argument, there's really no reason to me that Bitcoin should be $200,000. Like where the real value prop is at, I don't see it. It's old technology and blockchain at this point.
I mean, I think the only way we could really see that is if it disconnects from the other crypto. When Bitcoin moves up, all the crypto moves up. So if we start seeing a weakening in that, then we might see a break off. But until then, They seem to be tied to it.
Yeah. I mean, that's facts. I mean, with BlackRock and Grayscale having the ETFs now, they can control the price of Bitcoin. So, and by doing so, they can control the price of the whole crypto market. But it looks very nice, the setup here. Like I said, the crash, then the interest rates being lowered, coming in the tax refund season. Vanguard is finally going, hey, crypto's here. We got a lot of different companies like MetaMask and Polymarket working on prediction markets. We talked about it a little bit. Jupiter's got their predictions where you can bet on the presidents and sports and everything like that. So we're seeing a lot more prediction, gambling, casinos, sports, all that being put on blockchain, which is big industries. So more bullish headlines and background, I would say, being built up for this next couple of months at least.
Yeah.
Crazy.
I think it's one of those things where even the professional traders are on a wait and see mode. So I really don't think there's a rush. I just want to capitalize on the opportunities that I see, these dips that I see, just get a little bit, and may or may not, especially when it comes to AI and AI infrastructure, get those dips. And if it does work out, if it doesn't work out, it's so low that it's like, okay. But if it does work out, you can always add to those positions. And that's how these people like Warren Buffett and all these people do it. They get in low, get a position started, and basically they're cost averaging their price higher, but they're always staying in the winning position as that price is going higher. So that's my plan. Get in and cost average.
What's your short-term plan for Monday and Tuesday with the Fed meeting on Wednesday?
Well, one, I want to see if any other tickers will be moving like along the topic of SMX, because it was such a big move with gold and things. I'm wondering, is there going to be a pump out of gold now because of the big move up? Are people going to be profit taking before the rate cut, and so they'll be ready to re-enter after the rate cut, or anything that goes crazy, a dip or whatever? They'll have their money on hand to just be able to get back into the next idea. So I'm thinking, I'm looking for some sell-off on that topic, on gold and on maybe precious metals and things like that, because of this big pump from the Dubai buyers. And of course they got deep pockets anyway, so it may be a slow, gradual sell-off, but that's what I'm looking for. And then I'm looking for that next topic to take off.
I don't know, man. Gold has been really hot and high price, but it's been a long time coming. I don't know if gold will slow down really, because we got interest rates lower, and that means they're printing more money. Gold should, in theory, with them printing more money, gold should continue to go up.
Well, I'm just looking for a short-term dip.
Yeah.
Like exit of money, and then not a long pullback. It doesn't even have to be the whole week. Maybe just a one-day drop, and they're like, "Oh my goodness, what's happening with gold?"
Yeah.
And then that's
kind of like a reset, like we just had with the crypto market, because the crypto market.
Well, not that big. I'm looking for a short-term, just little, just a little bit, and then continuation.
The crypto markets pullbacks and rips are way more pronounced than other markets are right now, because it's still a young market.
Yeah.
If gold was to just drop that dramatically, that would probably, the whole earth would explode.
Yeah. We'll see a new SMX every day. Because the money's got to go somewhere. That's the thing. People that invest, it almost becomes a way of life. They're like, they have their time slot set up during the week. They're like, okay, at this time, I'm looking for investments. I'm gonna be buying, boom, boom, boom. And when that becomes your way of life of investing, you don't really get out of that. Every single week, you're like, man, let me find something to buy. And it really doesn't matter what it is. You're just looking for, now if the professionals, it does matter what it is. But some people out here that just have money, it doesn't really matter. They're like, oh, let me get a little bit of that. This is a discount price at $400 per share. That's a discount price. Most retail investors, they're not going to be like, that's a discount price. They're like, nah, I need to see that come down another 100.
Facts. But you know, when it's blood in the streets, like Solana going from 200 down to 120 that quick, made me hungry for some Salamas. And XRP being down like $2, because we know, like now that Vanguard has announced, it's Vanguard, Grayscale, and BlackRock. I was thinking, I don't know what I was thinking earlier. Anyway, but Vanguard announcing that, I mean, that's bullish news. So like I said, it's not like crypto's going anywhere. You got the stock market, you got gold, you got crypto, you got oil, you got all these different ways to fight inflation. Just recognize the market cycles. Find the market cycles where the money's going out of one into another, because that's all it does. It just rotates, continually rotates. Money will move from one area to another. That's pretty much how the market goes. That's how the cookie crumbles.
Yep.
That's it for this episode of Wall Street and Web3. Tell them where they can find you, voice of reason, HHTrader. He has a new name every week.
Yeah, so I stream every morning, pre-markets, HHTrader on YouTube. I'm on Twitch, I'm on Kick, and I'm on Facebook. So anywhere you type in HHTrader, I'll pop up. I do have a Twitter. I go out there sometimes, but the majority, if you're going to catch me, it's probably going to be on YouTube. So we do have a Discord as well, Framework Fortune Discord, where we actually continue conversations after the market has closed and all of that. Not closed, but after I'm not streaming and the market's still moving. Anything, any ideas, options, plays. We have several different. We got a person in our Discord. He's like a strategy tester. And so that's all he does is test strategies, looks for what's working in the current market, and just continues going. And I just like to learn, see the new things in the market and continue working on my strategy, which is, my strategy, I'm doing good in the small cap. So I'm just like, hey, let me just take those base hits and get on down for the day.
Yep. And shout out to the community in the Discord. We'll put the link in the description below so you can go join the Discord. It's a bunch of traders who know what they're doing, has been in there for a long time, trading with HH on the live streams and everything. Well, I don't know. Yeah, you know what I mean.
Yep.
And y'all know where to follow me, Framework Fortune, everywhere, all over. Y'all stay safe out there. Until next time.